I want to call out, TSM. Talk about them a lot on the show. They are making $100 billion investment in the U.S., spinning up some more factories. And in combination of that, there's a little bit of negativity that Trump is saying he wants to cancel the CHIPS Act.
I didn't even know this, but like gasoline is not even more than a third of the use of oil. We use it in over 10,000 products: shampoo, conditioner,
Yes,
lotion, Vaseline, nail polish. Basically every consumer, like P&G,
all the cosmetics.
they buy more oil than freaking BP. Paul talks about that a lot, about 3% adoption.
Wow.
That's where we're at. So if we get to 10% adoption, I believe we would have crossed the chasm, and we're probably sitting at 250, 300K.
Welcome to Bullish and Beyond. It's Beery the Bull. I'm your AI co-host. Join myself, Brian the MacMan, and JT Knows Things while we dive deep into the world of stocks, crypto, and how to live a bullish life. It's time to get bullish, and there's no better place to start than right here. Let's dive in.
Hey everyone, welcome back. Another episode of Bullish and Beyond. We got JT Know Things back on. He's feeling better.
We're back.
Yes,
Thank
sir.
God.
However, he's not feeling good about the market and the crypto environment. It is red.
Yes.
I have my green background. I'm kind of a constant optimist, constant bull. But wow, I am feeling the pain of the market. It's tough to sit through a market like this. And that's one of the things I want to kick off is, JT, what do we do when we are bleeding cash?
We lift up the couch cushions, we go find some more dollars, and then we fucking buy more. That's generally what I do. I mean, I generally, just as a hedge fund manager, don't like doing sales calls when I'm chasing the market. But in times like this, I do not mind picking up the phone and saying, hey, this is a decent dip. I mean, we're down.
Now's a good time to get in.
Look, the high was 108. It's trading at 89 right now. It got down to 78. You're at a 30% discount on a great asset. Nothing about the asset changed. Your thesis hasn't changed, but the price is down 30%. Like, that's a gift, okay? For people that don't understand that, that's a gift. Unless you have a reason.
Yes.
As to, right? Nothing about the asset has changed. Just,
dude, some of the tech stocks I'm following are down 30 to 50%. I mean, it's wild.
Like crypto.
I mean,
that's how much speculation
there is. Oklo's down 50%. Rocket Labs is down 50% from its high. And some of these names that are speculative are not core holdings of mine. So Apple, for example, is only down 10%. It's not taking the hit that some of these more speculative stocks are. I wonder, do you know why these more speculative companies are taking that much more of a hit in this environment? Like, do tariffs affect them more greatly, or anything else that you're seeing?
Well, from just a fundamentals perspective, their multiples are much higher. The price to earnings, because they don't make a lot of money.
Or they have no multiple. There's no PE. There's no
right. So there's a lot of hot air, in that asset to make that price. Like, the reason why I don't focus on price, to everyone who thinks I'm crazy about that fact, is it's literally a balancing act between sellers and buyers. And the only reason they click that button is they have an opinion. God knows how they came to it, but they have an opinion on the asset, and it's either going up or down in the future. That's the only way they click those buttons. And since the collective has an education of a sixth grader, I'm not very concerned about what they think. And when I see them being unreasonable, underpricing things, I like to buy them if they're good things. And that's really why I look at it that way. And I can't control what they believe either. I mean, I'm trying with this podcast, but you can't control it. So it's outside of your control. If it's outside of your control,
the media is trying to control what we're seeing. I feel like about a lot of these companies. One in particular, Tesla. I mean, Elon Musk, love him or hate him, he is getting slammed,
Destroyed. The new
absolutely
Nazi.
destroyed.
The newest neo-Nazi federal employee, which is
I
interesting.
mean, Elon's done so many great things with his businesses. The one thing I do have a concern about as an investor is how much focus potentially is lost with him spending so much time with the government. You know, I've seen him in these meetings with Trump, so obviously he is physically there. He's not just like a spokesperson, he's on the ground. So he's not on the Tesla floor, helping the factory create the next generation, cars, roadsters, trucks. So that is an issue in my mind that, he potentially has lost a decent amount of focus.
I mean, I kind of like his new focus right now. I'm not a Tesla investor. Is it okay for me to say that? I don't know if that's too offensive.
Sure. But
I
as an
like it.
investor, you understand the concern.
Yeah, absolutely. Absolutely, brother. I love what his focus is right now, though. I mean, I think he's going to end up saving us a lot of money and making America. Honestly, I do think he's going to do good things. I agree, though. Him being focused on those things is going to draw from everything. I would argue all of those companies, and it's crazy how many he has, are going to suffer, in one way or another. He
I mean,
ends up
everyone thinks
being
that
the
he's going to
key
get some
problem
huge leg
solver.
up. People are like, "Oh, he's in it for the money." I'm like, he actually lost 150 billion of personal wealth. I think he's lost more money than the third richest person in the world is even worth. So he's not in it for the money. I mean,
He
there's
don't
some
care.
long-term play, I'm sure. He's not an idiot, so he is going to get some more favor, I would assume. But if he's winning contracts, I think a lot of times he has the best product. Like him putting the Starlink inside the FAA centers. I would prefer to have the government cellular, planes talking to each other with Starlink than something else.
Yeah, and I couldn't agree more. Honestly, like I don't even think if anyone has listened to him that he would accept special favors. Like he
He
might,
doesn't need it.
but he literally believes, like he open sources his IP. He believes a competitive landscape is better for the consumer, and he cares that much about the consumer because that's the only way you build good companies. So
Yeah.
genuinely, I do not think he wants that kind of treatment. I think he wants to be the best, and that's his only fixation. And it just so happens his shit is the best. Like if he wins on merit, why are you worried? Like I don't get that,
I mean,
And
SpaceX as a rocket launch company has beat out NASA, Boeing. They're at least 10 times more price efficient than these other companies that are doing rocket launches. Even the company I love, Rocket Lab, is not even close to the cost to launch per kilogram pound than SpaceX. I mean, it's 10x more expensive for other companies than SpaceX. It's almost unreal.
crazy.
I also want to mention just again for the audience something you said about he gives away some of his tech and IP. He particularly gave away all the information how to create the batteries to make sure this was in the public knowledge. He says we need more batteries. I can't make them all personally. He said the world needs more energy storage to get green and be better in the future. Like who does that?
It's crazy. It's crazy. That IP,
He's
he could
telling
be
people
making
to compete.
royalties. Yeah, exactly. Like it's absurd that they think, we're not going to turn this into a political science show, but guys, Elon is a smart, smart dude. He is focusing on really important things, I think, at the moment, and the companies are probably, you know, going to be at a good discount. I would never
Yeah,
bet against Elon. You know, if Tesla drops 50%, I mean,
buy
buy
more.
more. That's a
It is
that's a
down. It is
deal.
down 30%. That does hurt.
That's a that's a great
Yeah,
deal. I personally, I didn't do this in my fund because I was fully allocated, but I personally bought that 78 dip. I mean, and I'm up to 89 right now. Like that's a crazy deal, guys. It cost 89,000 to produce. So, you know, That's just simple
It almost
economics.
has to
And
revert up to the mean then. I mean, is it ever going to trade below the cost? Not really. I mean,
I mean, it basically the correlation of bear and bull markets is all relative to the cost of production. And this is some like advanced level game for people that are listening. So like if you go look at that correlation, you'll find that there's a pattern. And bear markets bottom out around 40% of the cost of production. And then
okay,
the bull markets seem to peter out around 100 to 300% because we've had crazy bull markets, cost of production. And the reality is miners control supply and they're sitting on a lot. So when they're in mass profit, they sell. And when they sell, it's significant. And the market's not small enough to bear the capitulation of these miners. So the price gets affected and then it hits leverage. And then there's a black swan event. And then it's like, game over. And
got it.
they can't sit on
When you
like
say
like
miners, we're not talking about individual people mining coins off their desktop PC. We're talking about the companies that own like publicly traded mining
massive.
companies.
Yeah, Mara, Riot, yeah, massive.
Got it.
Like
Okay,
10, 20, 30 billion market cap, massive companies that all they do is mine Bitcoin. That's their thing.
got
Um,
it.
you know, 50 facilities, crazy stuff, alternative energy. They're the ones doing the research to get it more efficient. They're funding research on how to get these ASICs more powerful. Like yeah, those big dogs, they have, let's say their average Bitcoin costs them 32,000 because they've been mining since 2012, right? So it gets their average really low, and they're sitting on
Yeah.
90,000 Bitcoin, and they know that's their average, and it's trading at 108,000. They're about to make 4x, right? Like they have a fiduciary
They
responsibility
need
at
to
some
sell
point.
some to help their business.
Yeah, I mean, they got to pay off debt because they usually take a lot of leverage to buy the machines and keep them running
Yep.
because they want more Bitcoin. So they're going to have to wipe their debt. They're going to have to give returns back to their investors. And then they're going to go invest further in their business because they believe in Bitcoin long term. So, yeah, I mean, it's important. So they have to sell. And that's the major pressure when you start seeing these big fluctuations. Um,
Speaking of
you
these
can
big sellers,
really,
the biggest buyer I've seen
yeah.
out there, Michael Saylor from Strategy, I haven't seen anything about him buying the dip. I mean, which is kind of shocking. I mean, he was buying at over 100K. Why isn't he buying at 80K?
He says all the time that he will be historically known for buying the top, and he doesn't care.
That doesn't seem like a good strategy or a good fiduciary to a publicly traded company. And as a small shareholder, I wish he would buy the dip. So just kind of interesting that I haven't seen any, he's not out there, talking about Bitcoin as much when it's crashing compared to when it was rising, it seems. Or if he is,
Think
he's not getting PR on it.
I think he doesn't want to do the PR because he doesn't want to deal with the ignorance. If I had to guess, he's not a very patient man.
Okay,
If you've seen him, like
sure.
I think he probably has someone that tells him, "Hey, let's not do anything right now because you're going to look really crazy. You're going to look crazy because people are going to be freaking out over this volatility, which is a gift." And he said he calls it a gift like 50,000 times. And then as soon as you start saying like something about the asset, he's like, nothing has changed. He loses his patience and then he rages. He starts spitting. He looks like a dog. It's kind of wild. I think they just
Well,
try
if
to
it
keep
is a
him off the
gift, some of these
camera.
companies he's pitching, he's trying to get these, corporate companies to have it as part of their treasury strategy. It doesn't, high level, it doesn't seem that they would want that volatile of an asset as
Right.
part of their strategy.
You know, I agree. So like for it really to lose its volatility, we really do need to stabilize the market cap. And that's the exciting part, which is why Michael Saylor, genuinely calls it a gift. That looks to be around the market cap of gold or more, which would put it at around a
Okay.
million a token. Like it's I don't know what the demand is. The problem is there is a massive gap between the supply and demand, and that's why it's valued so highly. The supply is not going to it's not moving much. I mean,
It's
we're
not
looking
going
forward
up.
to having, yeah.
Only a
I
couple
mean, in
coins
the
every day, right?
yeah, I mean, and it's getting less and less. So as demand increases, there's going to be a crazy stabilization, and that is going to take volatility. You're going to
Okay.
have big sellers, big buyers, but once you have,
If it's
let's
less
just
volatile,
call
I
it,
think the corporations would be comfortable owning something that appreciated like a bit like Bitcoin. But I mean, Apple can't accept a 30%, dip in its cash-ish position. Someone asked Tim Cook recently, would he hold any Bitcoin? He said, I don't think anyone's buying Apple to get Bitcoin exposure, so no.
yeah. Yeah, I totally agree. I think they are the last adopters. I think they're the laggards. Right now, Bitcoin's in a phase, still, in my opinion, in the early adopter phase. We've not crossed the chasm. Raoul Paul talks about that a lot, about 3% adoption. Um,
Wow.
that's where we're at. So if we get to 10% adoption, I believe we would have crossed the chasm and we're probably sitting at 250, 300K. It's still going to be semi volatile though. It's going to have to creep up to about the market cap of gold to be less volatile. And even then, I've never heard of a company keeping 100% of their cash in gold. Like
Sure.
it's an asset for a sliver, and it's a sliver you increase or decrease based on risk and how you see the markets playing out. Commodities usually are uncorrelated, and gold
You mentioned that
is,
kind of 5 to 10% exposure was kind of that right point for most
yeah.
people, I think.
If you go look at traditional allocations into gold and gold indexes and all that stuff, yeah, that's a reasonable expectation. I personally tell people, like for my fund, because I run a riskier fund. I'm in the depths of the alts. I have Bitcoin, but it's only around 20% to 30% of the weight, depending on risk. And you know, I recommend 5% for my fund. I believe in my lockup period, 5 years, that will outperform Bitcoin, but I am in riskier assets. These are smaller
Okay.
caps. 3 to 4 billion is the average market cap of a token that I invest in. So it's been through years of market cycles. I'm like a dinosaur. I'm very boring, but this stuff is the stuff that companies are most likely going to use. Because like if you were going to set up an online lending service through blockchains and you wanted to use a DeFi platform, are you going to pick one that has 30 billion TVL or total, like all the money on it, and it's been around for 9 years? Or are you going to be on the new thing that just came out 6 months ago
I
and
want the big
everyone's
boy,
talking
less
about?
risk.
That's all it is. Because you're talking about doing lending. Like if Walmart
Yes.
wanted to do their lending
I don't want my
stuff that they
system to
do,
crash because I'm on a new network that hits a spike of, network activity and goes down.
and yeah, like they're going to pick the big boring stuff that has
Yeah.
credibility. I mean, real quick, World Liberty Financial, that's Trump's crypto company. Okay. They built on top of Aave. Aave's closest competitor is Morpho. It's only about 10 months old, and I've made good money on Morpho. I believe in their thesis, and it is part of my alpha. That's like my Rocket Lab. It's about 1% of
Okay.
my portfolio. You know what I mean? Just some alpha, right? But Aave is 6% of my fund. So my DeFi infrastructure is 10%, 7% is right there, 6 is Aave. It's my largest weight. It
Oh,
went from
wow.
50 to $450 once Trump announced that he was building on it. And since Trump was able to get 4 billion, that went directly to the Aave token. He had to buy 50 million Aave, $50 million of Aave a
So it
quarter, it
exploded.
looked like. Yeah, I mean, it's crazy, and that's just one application. There could be a million people that use Aave to stand up their own micro lending service, and it could just be a mom and pop that wants to do like a pay as you go offer instead of
Yeah.
using a firm or something. It's going to get so cheap that anyone can use it, and the amount
That's
of the
going to be cool.
token is going to go less and less. But if you get in early on these protocols and you buy up their supply, as demand increases for their services, as more apps
I
get
mean, you
built
mentioned
on
the
it.
pay as you go kind of thing. So like on Shopify checkout, you'll have, you know, a normal traditional pay as you go, and then you'll have this token as another option,
Yeah.
something like that.
Or Shopify could literally pay as you go, switch to blockchain without you knowing, and white label the entire thing because blockchain is just a
Sure.
database. So
And
like
they
you
can
don't know what your
they
database
can
is.
charge their percent on top of it.
Yeah, so like they could get rid of Visa and MasterCard, right? That's
Hmm.
3%. They could pick up crypto rails for maybe 0.1%. They pocket that. That's theirs. And all the
When you're doing
money
hundreds of billions times 2%, adds up a lot.
adds up a lot. Or you could just go use your own protocol and build your own thing on Aave and then offer it, and the customer wouldn't even have to know it was Aave. Like that's just the internet service provider, like or I guess the service provider, okay, that does that function.
Do you
That's
think they're
it.
even thinking about stuff like this? Should we pitch them? I'm friends online with the COO of Shopify, Harvey Finkelstein. We can maybe get him on here and talk to him about it.
That would be cool. That would be cool. Like I would love to talk about how blockchain could make their business better. I don't, stop talking about it. So I'd love that.
Hey, so
It's
speaking
that.
of the that coin getting picked up by Trump's
Yeah,
organization there,
yeah.
just recently Trump came out with this massive crypto. Uh, they're gonna be holding crypto down as part of the nation here. What is going
That's
on
right.
with that? I
Yeah,
saw there was a massive pop, and then it's kind of tanked since. So what's going on?
yeah. Yeah, the
This
digital.
reserve,
What was it? Yeah, digital asset reserved. I thought this was coming. I called it on the channel because
yeah.
he specifically did not say Bitcoin reserve. He said token reserve. And that little thing made me think he was going to do something like this. Eric Trump, his eldest son, also has been tweeting that they are going to do no capital gains tax on American domiciled crypto tokens. So that's not Trump, but that's his son saying that. And him and his son run World Liberty Financial. And if you go to their treasury, because it's all on chain, right? They got billions now. It's all American tokens. And it's the same American tokens that have filed for ETFs, including Trump's own meme coin, which is crazy.
This is a
Okay.
crypto reserve we're
So
talking about, or something different.
this is his World Liberty Financial thing. And I'm bringing
Okay.
all that up because this is leading up to your announcement you just talked about. So like
Okay.
that's the past few weeks he's been buying the exact same tokens
So
that
only
was in
coins
his
that are
tweet.
minted in America, or the company headquarters is in America, just to try to clarify.
Yeah. The term that I've heard him and other people say is American domicile blockchain companies. So that means their development lab is here and their actually, yeah, I would say where is your development lab? So like Ripple Labs is an
Okay.
American company. XRP is their token. So,
Okay. Got it.
and fun factoid, Bank of America is the largest shareholder of Ripple Labs, for those that didn't know.
Wow.
Yeah, they're
They don't they
actually
don't they don't
the
come out and talk about that very often.
no, 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 no. And Brad Garlinghouse is in the White House often right now, which is super interesting.
Is that the
So,
CEO of
the
Bank of America?
that's the CEO of XRP,
Oh, okay.
um,
Got it.
of Ripple Labs. So it's looking like he's working with the crypto czar on policies like this, and it could be likely that XRP is. I mean, they're adding it to the fucking
XRP was one of the crypto
federal
reserve tokens they
government's. Yeah,
mentioned. Yeah.
yeah, which is crazy because I've been a investor in XRP since God 2017. It was the very first crypto token I bought.
Wow.
I haven't seen it hit two
That's
bucks
crazy.
since then. Yeah, and it is so cool because if it actually achieves what they plan to do, the entire global monetary system would be on their ledger. And the XRP token is used. So whenever they want to send 10 billion between governments, let's say like, I want to buy your oil, they take the dollar amount from a Web2 database, they break it up, and then they make that they put it into Ripple, the XRP token, They send the token to the wallet, and then that gets pulled back up to dollars as quick as possible. It's called on-demand liquidity. So that's the
Interesting.
purpose of the token. If you buy the XRP
How
token,
long does that take?
oh, dude, it's crazy. Like 2 seconds, a
Wow.
second. Cost would be 0.000. I think it's a 40 XRP.
So it's
So I
easier
mean,
than going to Bank of America to make a wire transfer for $10 billion.
yeah, you try to send 10 billion for oil to China or wherever you buy oil from and see how long it takes. It's about 3 weeks, and they're going to take percents on a billion. You're paying millions to send money. It's crazy.
I don't
So
like that.
no, and that's like why XRP is attacking this problem, because if they were able to do that, that would technically mean they could have tens of trillions of dollars on their network. And that would price XRP in the few hundreds, and it's trading at $2 right now. So the upside's significant, and the real
This is
risk
not investment
is,
advice, but it sounds like it might be a good one.
yeah, I think it's undervalued. This is the craziest price it's ever been, and if they are
So why?
successful,
So the
and
fact that they're saying that it's in the reserve, how come it hasn't shot up? And it seems like that's almost the check mark. Like, hey, this is it,
yeah,
guys.
because people aren't going to speculate. It's this. Listen,
Okay.
out of the past 8 years, it has only spent 5 months above $2.
Wow. Not
So if
much.
you're buying it right now, like that's like I am not buying
It's
XRP right now.
speculative, technically.
It's the fundamentals, they actually have to get banks to, like, central banks to subscribe. So like until that happens,
Okay.
there's not going to be an increase in real network, and that's what I watch. I watch the networks. Until that adoption happens, that price isn't going to skyrocket, and I'm just not confident that that's going to happen in the short term. Like that's a long-term play.
Okay.
The United States has been suing them for 6 years. That has ended, so that's a
Whew.
positive thing. Trump's talking about it for the reserve. World Liberty Financial's buying the shit out of it. It's a
Nice.
good token. I'm bullish on XRP. I just don't like the price right now. Even
What
at a
about
buck,
some of
I think
these?
it's
What about
actually
some of these
cool
other
too.
tokens? They got Solana and ETH, are a couple of the big ones they
Oh,
said are going to be there.
yeah, I'm buying a lot of Solana. I love Solana. It has incredible cash flows, guys. It's making profit, the network, on its own with 0 employees, right? It's selling so much block space, it's pulling in right around 7 million a month to 10 million a month
Wow. What do you
in net
mean no
cash flow.
employees? Is it being run
I
by
mean,
a robot?
I'm saying the Solana network, that, like, the network doesn't need an employee. There's people at Solana Labs, the CEO and all this other stuff, but I'm saying the network gets that much profit from selling its blocks, which is like a whole thing
Okay.
to that's probably a whole
And the difference of it, they don't have a data
episode.
center like a traditional company, and it has a cloud and it's in a
Right.
physical location. It's just being spread across the computers. So, that's the reason there's no employees. It's just that individuals are
Yeah.
participating.
That's the whole point of blockchain. The token is an incentive structure. So like if you want to support the Solana network, you get a validator node, which are probably 4 or 5 grand. You download the software, and then you start, you know, authorizing transactions, and you get paid in Solana for doing that. The cash on cash return at these prices is like 6 months. So basically, people just want to keep investing in the network, and they keep getting
Wow.
more Solana, and then they can stake the Solana and get a return on it. I'm getting 9% staking without the price appreciation. So it's, and it is probably the third most successful network ever in crypto history. I would argue. Um,
9% stake
X,
seems pretty good. Is that at the high end of what's available on the tokens, or is there anything out better than out there if people are trying to
yeah,
stake their stuff?
Cosmos and Polkadot are more aggressive, but their tokenomic model is inflationary, so they can like mint more. I guess Solana's is too. Solana does have an inflationary
Okay.
tokenomic model, so sometimes the network will increase the Solana supply to pay the validators because they haven't made enough fees in their block production, essentially.
Okay.
Because you basically, every transaction you do on a network in blockchain, you're buying you're buying block space. That data, that interaction with the network needs to be stored. That's how networks work. That traffic and whatever you tell the network to do, that's all going to be logged. And so you got to store it on Solana, the network you're using, or on Ethereum or Bitcoin. When you do that, that fee is actually going to the network. That's your block space. You just buy it. Buy it as you use it instead of paying monthly or whatever. You just buy what you use. And that creates cash flows for that network, which is part of the fundamentals and the analysis of
So
it.
does that go to the
Pays.
person staking it? Yeah, I'm a little bit of a beginner when it comes to staking, so maybe we can
Yeah.
help everyone else out here. Like, how do you physically make 9%? It seems like a really good return. Who's paying
So
that?
they're going, yeah. So Solana is taking the fees from selling their block space, right? They're taking those fees and they're putting them in the treasury. And then in that, and you can watch that in real time. It updates every 400
Okay.
milliseconds. So then it's in the treasury. Yeah. So um it just does, like, because Solana's awesome. I don't know.
That's nuts.
And yeah, and then so that's Sol, right? Because everyone uses Sol to play in that sandbox on the network. So that Sol's being just dumped into the treasury from the network activity. And then they take that Sol and they pay the labs. So I think 20% goes to the founders and like whatever.
Okay.
And then a percentage of it, and I'm forgetting it off the top of my head. It's been a while since I've looked into it. A percentage of it, it's all online though, goes to the stakers, which are the people that say, "Hey, I bought this Solana. I'm going to give it to the network, and you can use it however you want. I just want more Solana back." That's what
Yep.
staking is. So that's that SOL that the network makes is being sent to the stakers. Hey, thank you for letting us use your Solana to run the network. Here's your fee. And then the rest of it goes to the validators. Hey, thank you for turning on your computer and running through these
Okay.
transactions. Here's your fee. So it pays all of the actors in this system
Yep.
for different things because they don't want to have to mint more Solana. That's going to hurt the price of it, right? Because they're going to increase the circulating
Sure.
supply. So if they have people staking, they're going to use that Solana as for transactions. They're going to basically rob Peter to pay Paul with it. They just know they got to return. Like if you put up 100 Sol, they owe you 109 Sol at the end, or like get paid weekly or whatever. And the network just does that. It just
How do
cycles
the
all the
percentages for
tokens.
staking, go up or down? Is it dynamic? Is every network just set their own percentage?
It's up to the network, but I can say Solana is dynamic based on network profits that has
Okay.
a floor and a ceiling, kind of like how an insurance product would be. So 9 to 12%, you're guaranteed 9. You could get up to 12 depending on the performance of the network,
Okay.
right? And then others have fixed, like Ethereum is fixed 3.2%, super low. That's because they're deflationary. At least they're trying to be. So basically, they want less Ethereum in circulation year by year to increase the value of
Got it.
Tether. So
Could
when
could
you're
this idea ever work
staking,
for the government? Like, could the government have a monetary policy instead of printing more money and then trying to sell treasury bills? Could they borrow money from public and corporations and offer a staking fee? Or is that maybe that's even just the same effect of offering the treasury
they
bills? I'm not
could.
sure.
It might be the same net effect. Because you know what's crazy, and I had to Google this.
We wouldn't be as much
Um,
deficit if we just borrowed money from example,
yeah,
BlackRock.
yeah,
We were just talking about before this call here.
that's
They have
right. Yeah,
$11 trillion under management. They could
right.
just ask them to, stake a couple $1 trillion every now and then, right?
I mean, that's that, but see, that's like them buying $2 trillion of T-bills. When you buy a treasury,
Yeah,
you're loaning the money to the government. So they
exactly.
kind of already do stake with
That's what I was
treasuries,
wondering. I
you
was like,
know?
how is that?
Yeah,
It's
same
kind of
thing,
similar.
really. Now, I think staking is way freaking cooler because I just wanted to close the loop on this. It's in
Okay.
the denomination of the network, the Solana. So if I put in 100, I get 109 sold back. In that year, if Solana's appreciated, your real return is even crazier. So like what
Sure.
happens if Solana went up 100% in that year and you made 9 for basically nothing? That's significant.
Now
Like
it's
that's the
now it's
massive.
20 now it's 18% instead of 9% basically you just made.
Well, if
If it's
Solana's
up,
up
if it's up for the
100%,
full year, it's just, using random numbers.
yeah. I mean, yeah. I mean, Solana was trading at $8. I had it staked. It's trading at 142 today. So
Wow.
I had 108 sold. I'm up to 131 sold without buying more in 2 years. And it's increased 22x since I bought it.
It's
I
impressive.
made, yeah, like I genuinely took a $3,000 investment, turned it into 50 something grand from staking Solana. And it's like, it's one of the biggest protocols. Everyone says all of its growth is gone and all this other stuff, but people don't understand how networks get valued. Metcalfe's law and Lindy's law. These are like computer science things that just exist. Like something ethereal, something that's not tangible, is more likely
Yeah.
to exist for however long it's already existed. Like Facebook is way more likely to be here for the next 30 years because it's already been here for 30 years versus
Makes
something that's
sense.
been around for 1 year, right? The likelihood that it's here another year is way less likely. And there's a whole
Yeah.
mathematical equation for it. It's
Compare that
called
to
Lindy's
another
law.
another social network like Clubhouse. You're like, all right, well, it was around, and then it's gone.
Yeah. If it's very rare to find something that's been around a decade and it stays for another decade if it's not doing anything. Like things don't live without attention, capital, resources.
I'm trying to figure out what the investment world equivalent is of the staking in the crypto world, and it's kind of like, selling a call option that you get some premium back by lending your shares in theory, and hopefully they don't get called away and sold. And if people are wondering what selling a call option is, if you sell one call option, you're giving someone else the option to buy 100 shares at a certain strike price. If it never hits that strike price, they're not going to exercise it. You're going to keep your shares and you're going to keep the premium that was paid to you. So kind of like that.
Kind of. It is a straight. It could be like them buying shares back and eating up the circulating supply to increase your share price. It could be like that,
Well, that's what
maybe.
companies do. Like Apple, example, is always spending money buying back their shares. So it increases their earnings per
Yeah.
share, decreases the float of outstanding shares. It's seemingly a win-win for investors. People like Warren Buffett, love that. Hey, speaking of Apple, they came out with some new
Yeah.
products this week. So they got some
Okay.
new MacBook Air
I
M4.
was about to guess. I was about to guess. I bet it's the same shit. It's just a little better, isn't it?
Yeah, a little
People are
better.
going to go crazy for it.
20%
They're
faster. You can get it in
they're going to go
sky
crazy.
blue. It's not quite as blue as I would like, but it's a nice light
Sure.
tint. Haven't seen it in person
Yeah.
yet. It's just coming out now. They came out with a new iPad Air, has an M3 chip in that. Nothing game changer, just slightly better. They came out the next generation budget iPad as well. But the one that's really the powerhouse is this Mac Studio. And I wonder if anyone out there is going to be mining crypto with this thing. I mean, it has like a 40 core, GPU, and you can do up to 512 gigs of unified RAM. This thing is a
Yo, okay. I
monster.
I didn't know Apple made stuff like that. That's
They
a
they just
beast.
they just blew it up. You can spec it out to $14,000 if you get the
Oh
512 RAM
wow.
and their 16
Yeah.
terabyte hard drive.
Wow. That
That
thing
is
sounds
a
sick.
beast of an SSD. So
Yeah,
pretty
that thing's
pretty
crazy.
cool.
How big is it? I'm curious. What's it look like?
It's like the size of like two Mac Minis, basically, just kind of stacked up. Um, it's like a very small personal pizza, with the pizza box.
That's impressive. Could you imagine getting a $14,000 pizza box? Like, that's ridiculous.
It
It's
looks pretty
incredible they
serious.
can. Yeah, it's incredible that they were able to put all that in such a small outfit. That's
Look at
pretty.
this. Shout out to the
That's
company I work
impressive.
at, Otherworld Computing. They actually have in their imagery right here is an OWC product that they're showcasing hooked up to that Mac Studio. So people are wondering that's the Mac Studio. And
Oh
those are
wow,
some OWC external hard drives right there.
wow.
They took
Their
off the
16
logo in
gig,
their
16
picture, but
terabytes
those
wasn't
are
enough.
our product. Yeah,
That's
16
awesome.
terabytes not enough. You got to slap on another 4 terabyte external. Yeah, no big deal.
Yeah, no, I mean, what are you doing? That's a lot of data. Like, that's crazy.
Yeah.
Uh, we'll eventually be measuring things in petabytes. That's kind of a cool thing, but eventually,
Wow. I mean, it's going
because
to spin up
terabytes
so
will just be
fast. And
so cheap. It's gonna be so
it,
cheap.
I mean, my first computer had, 200 megs when I was, 13 or whatever.
Right? Yeah, I
So we're,
remember
we're,
those
so
days.
we're already we're 1,000x that. So it's like in another 20 years, we're going to be talking 1,000x. So yeah, we're talking petabytes. And at the speed that AI is going to be creating, data, I'm not going to be shocked that we're going to hit this in the next 5-10 years, talking about petabytes of storage.
Dude, just video games. I'm a gamer. The game files are getting crazy because everyone wants 4K. And people don't understand how many pixels that is. It's insanity. So like these
It is
files,
nuts.
I mean, Call of Duty is over a terabyte itself.
Wow. Just to download the
Crazy.
base.
Yeah, and dude, only 32 megabytes is stored on a CD-ROM. So think about that. I mean, when we were putting in discs in Xbox compared to now, a terabyte for a game, I think it's 1.1 terabytes.
Wow. That's
That's
intense.
11. Yeah, what is that? That's 1100
I mean, the
gigabytes.
base hard drive of computers doesn't even include that. It's like
Right. Like, and that's just one of the most popular games in the world. So, like, imagine 20 years from now what the content demands are going to be from entertainment. And they're going to have to go into headsets like VR or what are we doing in 20 years?
yeah,
I don't know. But wherever the delivery method is, we want smaller devices, but what we want to experience is way more
smaller
demanding.
devices, higher res. I mean, Apple's
Yeah,
Vision Pro, it's each eye sees a 4K TV.
that's what I'm
So
saying. Now, how much more space do they have for compute? Because if you're trying to execute a terabyte on that thing, there's no way. Unless I'm sad. Unless I'm like I
that's the
don't look
top
into
option
it.
they offer. I mean,
There's a terabyte
that's the top option
of
you even can get.
SSD.
Uh-huh.
That's crazy.
But
So
that's
maybe,
not gonna be good enough, for these big games in the future. So
yeah, when
I
we
mean,
have
they're
20K streaming or whatever the hell they're going to do with pixels.
besides the storage, they're also going to need some more amazing chips. And I want to call out, TSM. Talk about them a lot on the show.
Yeah, yeah,
They are
yeah.
making $100 billion investment in the U.S., spinning up some more factories. And in combination of that, there's a little bit of negativity that Trump is saying he wants to cancel the CHIPS Act, that it's horrible, horrible, which I disagree with. I think we should be doing way more chip production in the US, especially to shore up our supply chain, not be reliant on other countries in times of future war, God forbid what happens. But yeah, they're going nuts on these factories in Arizona and stuff like that. And this isn't new news that they have spinning up factories, but they're launching even
Right.
more now. And these factories are like $25 billion to start. I mean, it is major. So it's just another one of the
That's
reasons that I think there's such a moat around TSM and why I'm super bullish on their future is that when you already have that type of plans to spin up 4 factories, I mean, another company, even if they had the cash, would be 5 to 10 years behind. Like you literally can't just launch a chip fab.
right.
So if you have the idea to make a chip, you have to partner with them to make it because you can't make it yourself. So, a company like
Wonderful mode.
OpenAI wants their own AI chip, they're talking to TSM to make it. Like that's the name in town.
That's great for TSM.
I think so.
Yeah,
So I'm
that's
I'm
what
very
shows
excited
up.
about them.
You couldn't ask for a better moat as a business. I mean, that's the kind of stuff when it's trading. And what's the discount today? Do you know off the top of your head?
It's down like 15%. Not crazy, but that is down.
I mean, so and people out there like 15% in stocks, I would buy that. Crypto, maybe not, because as you can see, like dips are big here.
Could
It's
be down
like
50% in a day in
30%.
some crypto. Easy.
Yeah, I mean, Bitcoin's a $2 trillion asset, and it dropped 30%. So crypto's just crazy in general. Um, but in stocks, 15%, people might ask, what happens if it goes lower, That's when you just buy more. And what that does, if this is like, let's say it is the bear market, you have an opportunity to get your average cost lower, which when you eventually sell for retirement means your return is going to be higher. Me buying
Yep.
Solana at, 160 in the bull market, that's when I started buying it. And then I was able to start buying. I stopped. I was like, it's too expensive. I waited. I started buying at $30. I couldn't believe it kept going lower. I didn't even have time to buy. I would walk away for a month and come back. It was down another 30%. It went down
Wow.
92%. I started buying at $30. That got my average on 100 something Solana. That got my average entry down from 160 to $21. And now it's trading at 142. It topped out at 280. So if I didn't buy more, right, and
You be
and
break
I didn't
even.
stick to my thesis, yeah, I'd be breaking even.
But
That's the
not but
beauty
now
of
but now
dollar
you're up
cost averaging.
600%.
Yeah, which is just like awesome.
I think
So
one
that's
takeaway is,
why
don't
people need
invest
to
all your
understand that.
money at one time, because you bought it in tranches.
Yeah,
I mean, if I have,
yeah,
10K to invest and I sink it in on day one, well, I don't have any more money to invest. But if I invest 1,000, every day, well, I can, up or down. I'm a dollar cost
yeah,
average.
yeah. Or break that 10,000 into weekly payments and
Yeah,
spread it out over the year, pick 5 names and fall asleep. Like there's a lot of different ways to do it. But putting your entire nut in one name in one moment, that is not the way to do it. Not
I
financial
agree.
advice,
I'm,
educational purposes only, but that's bad. That is bad. Do not do
JD,
that.
JT, I'm feeling the pain a little bit here on the portfolio I started to showcase on this podcast. I'm down over 26% last time I checked today. And
Damn.
it's in Palantir and Meta, Facebook. And Palantir is taking a massive, massive hit. I don't necessarily believe it's justified, but that is where it's at right now. So, I was buying it near 100 and it's down to 80. Facebook, I was buying close to 700 and it was, down below 650. So these names have taken a big hit. I am gonna put some more money in for this next month. I haven't decided, what day I'm gonna pull the trigger on that, but kind of per the dollar cost averaging, I think those names are still good buys for the future. I'm not sure if I'm gonna put them in those names again, but that is something that I'm thinking about. So just want to call it out here and, make sure I make some smart investment decisions myself that I can, share with everyone on this podcast.
Yeah. Yeah. One, rest in peace for the short term, but we're long term, so it's not a big deal. I gotta pay respects to the money. I got to.
I feel like sitting tight
So
right now. Like it's
you
it's
think
like
we got
almost
more?
it's like almost in like free fall. Like I almost want to wait to see it come back up a little bit. I don't need to catch the bottom. I don't want to necessarily get in during the free fall.
So I'll tell you what I do at my fund. It might be helpful, it might be not.
Okay.
You called it tranches. I call them shots. I'm going to steal tranches. That's much better. I have 6 tranches per name,
Okay.
and I allocate to the name on a preset um, amount on my new allocation. So if I got a brand new fresh 100K in my hedge fund, I'm going to revisit my portfolio desired allocation. Then I'm going to go to my real allocation because the weights are moving because price is changing.
Yep.
and I'm basically going to try to, so I don't sell and create taxable events. I'm going to be buying things just to keep my ideal weight. So I'm going to be rebalancing. That's like
Yep.
one of my first focuses. And then I have some I call desired trades where when I'm doing this rebalancing, I'm also paying attention to the biggest discounts. And then I might reconsider weighing something more and update my sheet. So I have 6 shots and I'm rebalancing and I'm looking for good discounts. So I then, based on my
When you
degree
do
of
those 6 shots, are you
confidence,
splitting it up 1 6 1 6, or it's not like that?
it's like I have 6 shots and I can on this 100K and I have 30 days to allocate it. So
Okay.
I got a dollar cost average, get my entry as low as possible with these 6 investment opportunities.
But in
So
theory,
right
would you
now,
always split it up in those 6 shots evenly, or could one shot be half of that 100K and then the other
oh
six be
yeah.
smaller?
Oh no. It would be like
You split it
100K.
up.
Yeah, so if
Okay.
10% is Bitcoin as an example, that's going
Yeah.
to be 10,000 divided by 6. I have
Okay.
6 whatever that would be. That's bad math, but 1,500, I think. I have six $1,500
1666.
investments. Yeah. So I would take 1666 payments and I would try to snipe local lows on the
Okay.
weekly on Bitcoin. So that's like how I do it. I guess it sounded way more complex. I haven't explained that to someone before, but in general, guy, like, yeah, it's just, or for you, I like to just break that up into 6 total decisions. And if you're trying to allocate that, whatever your goal is, like I want this done in a week or a month, whatever it is, I would just change my charts and like the news and everything to that time frame.
Yeah. I mean, being more
And
methodical
then,
kind of makes sense. Like, regardless, like I can't lose it all if I only put a sixth in today. And even if the market crashes
yeah,
tomorrow, I'll put another six in.
yeah, yeah, exactly. If you want to do it in a week, do it six, make 6 decisions for that name.
Yeah.
Um, and sometimes if I'm really confident, I'll do 2 shots at a time or 3. So I'll use
Okay.
half my shots because I'm like, there's no way it's going lower from here.
It's
And
not going to get
sometimes it
better.
happens. Yeah, like if Solana goes below 100, I might leverage the house. Like
Okay.
that's crazy. I love that price. I mean, it's making, that's a 10 times of its, that's 10,
Speaking
10x
of
price to earnings.
leverage, are you using leverage in
Yeah,
your hedge fund?
no, no, I would never do that. I'm being all bravado. I'm not that guy. I don't do leverage personally.
I saw an
I know
article
you
about
can.
a whale in Bitcoin the other day that went 50x leverage and made a couple $1 million in like, less than a day.
Was it a
Um,
short?
no, he went long when it went from, to 80 to 90, and he just 50x leverage just crushed it. I don't normally see many
Yeah,
Bitcoin stories, but I was looking at my Robinhood app, and it just kind of was the top story out there. So that's why I was curious if you're using leverage
I
or not. Obviously, it's crazy risky. His price that was going to sell, as an example, let's say he bought it at 80,000. If it went to like 79,800, it was going to sell out. Like he had no room for downside.
Yeah, that's crazy.
It had to go up.
Yeah, my rant earlier about price, positioning my investors' retirement in a situation where the price, which is a variable I cannot control, determines their future with me. I don't like that at all,
Yeah,
basically. I just want to be able to focus on
it's
the things
very
I can't
risky.
control, which is my research, and I can't my research won't affect leverage, my brain and how I see the world and all of the things that people pay me for. I go out the window the second I make a wrong decision about a variable I can't control. That just seems there's a fallacy there. Like I just doesn't make sense to me.
Well, people can either
Now,
lose money or make money very quickly using leverage. I mean, if you're not a professional, major investor, I don't think it's a good idea for people to use any, multiple of leverage. Not to say you don't, put your money to work, but don't over lever yourself.
be responsible. I think everything in moderation, right? Like A mortgage is fine, but when you got 10 credit cards and 5 cars, like, not good, right? I would
So
say.
sell one of
So,
those supercars and pay off the cards.
yeah, yeah. Gonna be broke the rest of your life. I don't care if it's 100,000. You spend 80,000 a month, you make 100K a month, you're broke. Like, 20K is going to taxes. Like, you're broke, you know? Um, yeah.
Well, part of the
So,
beyond in this podcast, we need to help people not be broke by making sure they do make good investments and live a good life. I'm reading this book, 10X Mentor, right now, and it's got me thinking a little bit differently about my house, for example. That I bought this asset that I'm sinking money in, and my house asset is sure it's technically appreciating according to Zillow and stuff like that, but it's not making me money, and I feel like I need to put more hard assets to work that are actually making me money at this point.
mhm.
So
Yeah.
something that I'm working towards. Grant
Yeah.
Cardone's got my real estate ideas spinning. I used to have an Airbnb back in Cincinnati that spun out some
Yeah.
good cash, but I don't have any rentals anymore.
Maybe we could. I know a lot of operators. Maybe off cam we can figure that out and update the team
Yeah,
on
I know
that.
you got some good investors there, that some pretty big operators on your end.
Yeah, real estate that they like crypto. They're more open to risk, so I'm their crypto guy and they're my real estate people, but there's passive ways. I personally I like oil. I'm considering getting into an oil deal this year. Um Oil's super interesting. Did you know the cash on cash average return is 82%?
Really?
I don't sell oil, guys. This is me just as an LP, just trying to explore it. But yeah, like there's a lot of offerings out there where their break even is 28 a barrel. It's selling for 72 a barrel right now. So they're in profit 50 something a barrel and they're moving hundreds, if not thousands of barrels a day. And it costs 5 million to 10 million to stand up. They raise that through people like me. Minimums are high, but um, you know, they're going to spit
That's a
out 2
crazy
to
percent
4%.
return.
Dude, and it's all cash flow. They're giving you anywhere from 2 to 6% a month in cash flow.
Wow.
So that's how you get
It's
your cash
almost
on
too good
cash
to be
return.
true.
The downside is the price of oil, and you could have a catastrophic failure on site, and the oil could be corrupted. Those are like the main three things.
A lot of the
Technology
pitches
makes
related
life
to
a lot
oil I've
less
seen are
risky.
like tax advantages. There's like crazy tax breaks for oil.
It is
Like if
crazy.
you invest
So
in
you
that new
get
production or new site or something, it's like insane write-offs.
90%, 90%. You give them every 100K, you get 90K loss, brother. And then every year you get a depletion reimbursement, I think, or something like that. But the total value of the oil, once you pop it, right? Basically, since you're destroying, they call it a depletion incentive, but you're destroying the land, you're destroying the platform. Nothing is going to be
It's
worth
like
maintaining.
depreciation,
So,
but for oil, it's depletion.
yeah, exactly. So they basically give you on that whole value, I think it's 5% a year until it's completely depleted. But that gets spread to all the LPs. So on top of that, on 100K, on top of that 90K year one loss, you should be getting anywhere from 10 to 15% a year for the rest of your life. So like 10, 15K loss until that oil is gone, which is like a 30 plus year thing. Some
Wow.
wells have been going for 200 years. So when you get that kind of
Even if it didn't
return,
make
you can
money, you
just,
still might, the tax write-off itself might even compensate you more for the investment.
and then you can, God willing, it makes money. Inside of 3 years, you could have 2 wells. Inside of 10 years, you could have 15. I've done the math for my own,
It's very
analysis of
interesting.
should I do this or not. But I understand how you become all that oil money. Like now that I actually have one of the operators that is interested in my fund and I'm actually learning about his business he's been doing for 30 years with only one bad platform in 30 years. So like the guy hits.
Yeah.
Um, those are the numbers he's doing. I don't know about the rest. They might be better, might be worse, but I know a gentleman doing that and it's serious. I mean, someone gave his minimums are 250 you could expect right now, I think it was either the checks that are going out are 21,556. That's the check going out right now,
for the
1 1
month.
for the month.
You're getting 10%
So
of your investment back in a month.
yeah, that's the right now at the price of oil, that is the check that he's sending for a
I
250K
don't think
deal.
oil is going down. I mean, as much as I love green energy, I'm super bullish on solar and stuff in the future. You know, right now it's still too expensive. Fusion reactions are just starting to take place. It is real, but it's long term until it's actually commercially viable. I think that we're going to have oil for a long time. It's not going away.
Yeah, I agree. And I didn't even know this, but like gasoline's not even more than a third of the use of oil. We use it in over 10,000 products, shampoo, conditioner,
Yes.
lotion, Vaseline, nail polish. Basically every consume like
All the
P&G, J&J,
cosmetics.
they buy more oil than freaking BP. Like it's kind of
That's
crazy, but
wild.
yeah, it's like endless demand, which is why everyone only focuses on supply. So like the entire economic model is like unlimited demand. We just need to know the supply. And that's why Ray Dalio flies satellites over oil wells and like he's just trying to understand the real numbers of supply for oil so he can make plays. And because of the endless demand. So the only way price goes down is its supply goes up. And drill baby drill is going to increase supply. So I actually think it's going to go down. It'll be interesting to see who's right about that. The problem with oil investing and the price of oil
But if
going
supply
down,
goes up, I mean, demand might be going up too. I mean, we need more energy to run this world. I mean, energy
yeah,
consumption is going up for sure, in my opinion.
that's a fair point too. If demand keeps going with the supply, then
I mean, look
70
at data
seems fair.
centers
And
as like a just one line
yeah,
item. Those could be 10x needs in the next by the end of the decade. We're
I
spinning up
might end up
nuclear
eating my
reactors
words.
to
Yeah,
run these data centers.
we'll see. I agree. That's a fair argument. I mean, I love the idea of the investment. I'd have to really see that case. Like a lot of people are trying to just reduce the cost of energy, and oil is historically
Yeah,
expensive.
it is.
Um, so I mean the per unit, let's say per joule, like if I want to break it down into the base unit, like that cost per joule needs to be low, 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 low. I mean, it needs to be as low as possible. So there's a race to bringing energy consumption down, but performance up. I There's going to be a period where we're going to have to find new energy, or else we're going to be stuck in this age. And
But here at some
nuclear
point, energy
seems
is
to
going to be
be the
free.
pivot.
Like if they can do fusion at some
Yeah,
point, I mean, it's crazy expensive right now, but at some point,
yeah,
it could be so much energy. I saw a comparison talking about oil that 1 pound of fusion energy is it the same as like 230,000 barrels of oil or something. I
that's
mean, it is
crazy.
just unreal.
That's crazy. That's wild.
It's hard to even imagine that much, like the pressure of energy inside that.
Yeah, that's crazy. Could blow up the world.
It literally can. Um,
That's crazy.
I mean, the
Yeah.
the video I watched about the biggest fusion reactor that we have in the U.S. It was showcasing how it bounces through all these mirrors to create the pressure to hit this thing that's the size of a grain of sand to make it explode to create this fusion reaction. And they're saying at that exact point, that amount of energy is more than the entire grid in the U.S. combined.
That's crazy.
But the length of it though, like it's like less than like a thousandth of a millisecond. Like the energy lasts so short, but it's so strong.
That's crazy.
It is wild. And they're to put the energy in isn't even that much. It just multiplies through this labyrinth of like tens of thousands of mirrors and stuff basically to get down to that. It It
Wow.
is wild to learn about, and I'm not explaining it perfectly. You'd have to go, watch it because it's
Yeah, of
hyper
course.
complicated. There's thousands of PhDs running this thing, and I don't have any expertise in this.
Yeah.
I'm just
Yeah,
interested
neither
as a
do I.
human in free energy in the future.
That's one of the best things about Star Trek. Energy was free, so it cost nothing to make anything because robots did it and they were free to power. So you had no currency, no conflict, one
Well,
global,
that's how we're going to explore the
world.
universe. If you have robots that can live forever and you have, free-ish energy, well, you can send them off light years away and they can report back in millions of years, whatever they find.
Yeah, I like it.
It's wild.
I like
Dude,
it.
these are some great
It
bullish
is.
ideas. I think this is a good point to wrap it up. We want to bring everyone some fun ideas. So, today they could take away this idea about, maybe investing in oil or maybe finding some special deals, in the crypto world or just buying in tranches on some of these stocks. But hopefully some of this stuff helps the general community out there. And that is our goal. We want to bring knowledge to you all. So thank you, JT Knows. Thank you to the
All
community
right, guys.
for tuning in. Cheers,
Thank you,
everyone,
guys.
for another episode of Bullish and Beyond.
Cheers. See you, everybody.
Bulls. That's a wrap on today's episode of Bullish and Beyond. Remember, the market never sleeps and neither should your ambitions. Whether it's stocks, crypto, or just leveling up in life, stay focused, stay bullish, and keep charging forward. Keep your energy high and your mindset bullish. This is Beery the Bull, your AI co-host, Brian the Mac Man, and JT Knows Things signing off. All content published by Bullish and Beyond, LLC reflects personal opinions only and is provided for informational purposes. Please conduct your own research and discuss with your accountant and/or financial advisor before making any financial decisions. The information presented should not be taken as financial advice. We are not financial advisors. Nothing you hear, see, or read in our content should be considered as any form of financial, investment, or legal advice, or a solicitation to buy or sell any assets, or to make any financial decisions.